Hi there and welcome to the StockScores Market Minutes for October 24th, 2011. Before I get started with this week's analysis, reminder that you can get my free weekly newsletter at the address on screen. That's stockscores.com/newsletters.asp. Alright, let's get to the charts. The most important chart right now is the chart of the US dollar. It is an indication of what is going on in Europe. As the dollar rose, it was a sign that there was fear of a financial breakdown in Europe. Now that the US dollar is retracing, we can see that there is some light at the end of tunnel in Europe. So the fact that the US dollar is dropping is really what's helping the Canadian market. Today, the commodity-based Canadian market broke its downward trend line on the strength of oil stocks and mining stocks. And that break of the downward trend line is a positive sign, since it is also breaking from a rising bottom. You can see here on the chart, I have drawn a green line at that rising bottom. We have broken that parabolic downward trend, and it looks to me like the Canadian market is finally going to catch up to the US market. Now, of course, the US market has done very well over the last few weeks. It has risen almost 14% from the lows of October 4th. It in some ways is a little bit overbought. When you have such a recovery in a short amount of time, you have to expect that there could be a little bit of short-term profit taking. But really what the market is trying to do now is go back into that pattern that was building through the spring and into the early summer. And that really takes us out of the European crisis. The area that I've highlighted in pink on the chart here is the market's reaction to problems in Europe. And now that those problems are starting to go away, we should expect that the pricing will go back into that pennant pattern. Now, in the very short term, since the market has come up so much in anticipation of some resolution to these problems, I wouldn't be surprised if we get a little bit of a pullback, but certainly optimism is returning to stocks in the longer term. Now, next up is a chart of gold, and in the middle of last week we had a downward move in gold prices, and I had many of you wonder if this was a breakdown of gold. But what I've shown here is the upward trend line, the upward channel in gold, and you can see that that upward channel was not broken. In fact, we bounced off of the upward trend line and remain in that channel. Now, the green zone that I have shown on the chart was really the emotional part of the upward trend for gold. And now that that has been taken out, we are back into a rational upward trending market for gold. That means I expect gold to continue higher, but at a relatively slow pace inside that channel. Now, if prices break down through the bottom of that channel at the green line, then we have to change our view. But for now, the buyers remain in control of gold. Oil made an important break of the downward trend line today with some abnormal move to the upside. That is a positive sign for oil. It is probably a reaction to the drop in the US dollar, but it could also be an indication that investors are starting to get a sense that the global economy is improving. So don't read the headlines. The charts are telling you that things are getting better. And therefore, I have got an optimistic rating on everything that I follow. However, it is a cautious optimism. Because optimism, while coming back to the markets, it is fragile. And therefore, I suggest that you manage risk. Don't put all of your capital into the market just yet. Move into it slowly and look for pullbacks as a buying opportunity. Well, that has been the StockScores Market Minutes for October 24th, 2012. Getting 1 year ahead of myself. It's only 2011. For more information on what we offer at StockScores, please give us a visit at stockscores.com. And if you would like to register for that free weekly newsletter, do so at the address on your screen. Have a great week in the market and trade well.